The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 8:30 a.m. Thursday morning. We're going to get weekly jobless claims in a moment. Right now, the market's accelerating to negative territory. So much for the extension to higher prices. Right now, you get the S&Ps negative by about 77 points, trading at 3108. The Dow off 819, trading at 26,141. NASDAQ futures negative 166, trading at 9921. U.S. weekly jobless claims, that number just coming in 1.542 million. The number they were looking for, 1.6. So continuing to drop, but we're still getting 1.5+ million weekly jobless claims. That number just hitting the tape at 8:30. You see the extension from where we were yesterday, right? 2:30, 2:50 in the afternoon, you were at highs of about 32.21. You go from that level, we're down a staggering 110 S&P points just from 2 o'clock in the afternoon. Yesterday, we were trading as high at 3:30 as 32.12, so 105 S&P points from basically almost where we closed within a half hour. You drop pretty quickly at the end of the close there, a solid 20 S&P points. We're looking at 15-minute bars. The 3:30 bar takes you yesterday from 32.12 to 32.01. The next bar goes from about 32.01 to 31.85. We close it out at 31.88. S&P's approaching session lows at 31.06, down 80 points. Jumping over to the NASDAQ, reaching a high 10,155 yesterday. Now we're trading at 99.26. How about a solid 200 points, 230 points in the NASDAQ 100, and the Dow, quite a drop as well. Yesterday's high is 27,624, currently trading 26,122. I see that's actually Tuesday. You back it up to the highs we had on yesterday. We were trading as high as about 27,350. So you're talking about 1,200 Dow points from yesterday afternoon. Jumping around to some of the commodities, gold contract right now, 1734, had been above 1740 early in the morning, down to 1728. Euro US dollar 113.40, and crude oil dropping a bit as well. We were up at 38.50 at about 6 a.m. You have crude trading to 36.86. So a lot of the headlines you're seeing out there have to say stock set to plunge at the open on virus second wave concern. Now, what I don't understand is how this concern developed overnight. Now, of course, you have the Fed. They came out yesterday, right? And there's your headline for the exacts. We said 1.542 million on the weekly jobless. Fed sees interest rates staying near zero through 2022. GDP bouncing to 5% next year, but that's only because they see it tumbling 6.5% this year. So that news coming out yesterday afternoon, 2:30, a little bit of the sell-off yesterday afternoon. That's off continuing today. As far as the concern for the virus goes, second wave, there's nothing that came out in the last 24 hours. You know, things have been accelerating, but they've been accelerating in some of these key states in particular. I've been mentioning it in Florida, Texas, Arizona as well. I believe South Carolina has it. We'll jump to a second. But, you know, this is a headline we're talking about yesterday. Second U.S. virus wave emerges as cases top 2 million. All right, that's getting updated as well. But nonetheless, that's yesterday's article. You jump to the total numbers for the U.S., we've eclipsed 2 million cases. Death toll, staggering number that we continue to march on, 113,000. This is in the U.S. we're dealing with. You see the curve? That's a flattening number, folks, of about 20,000 new cases a day that we're dealing with. And when you look to the number of states that are rising, it's a staggering number. We're talking about 21 states, and I believe this is on a 14-day basis. You don't have to be a statistician or a chartist to see the rises in Florida, North Carolina, Arizona, Oregon, some of them starkest, right? Alaska, Utah, Kentucky, Arkansas, Nevada, casinos back open, New Mexico. You scroll it over to Florida itself, and there's the cases themselves. You can make a case here. Since May 25th, we had 306 new cases. Testing was increasing during the month of April. But as you get into the middle of May, testing has been pretty readily available, and we were getting, whether it was 500, 600, you see the 7-day trending line in the dark red, and things are spiking, as they are in many states that I just listed: Texas, Arizona, and there's Florida. So we'll see what happens. That news has been out there, though. That's my point. I mean, I had talked about on the program, I think it was back on Monday, on June 7th, talking about the 5-day total. That Monday, if you just took the last 5 days in Florida, it's a staggering number. So be aware as that hits the economy, how that's going to affect things. But this is about the Fed and what they were talking about, because there was nothing overnight that occurred that made the world realize there might be a second wave. Now, what is going to be interesting to see how things play into is what happens down the line. I mean, we just got weekly jobless claims, right? We're dealing with a number of about 1.5 million. We're looking at an S&P that's down 84 points now at 3,100. The NASDAQ's about to dip below 9,900. The Dow's flirting with 26,000. Things are accelerating here. They really are. And when you jump back, what's going to be the next round of funding if things have a problem? Well, Democrats, GOP continue to spar over extension of the extra $600. That expires July 31st. Okay, so there's going to be political disagreements for sure. Now, what's interesting, though, is that this story coming out just recently, the White House and the GOP, so Republicans push coronavirus relief talks to late July. Well, the Senate and House will return to Washington on July 21st, 10 days before that CARES Act expires. If they're going to start talking about it at the end of July, folks, if we have spikes going up, if we have people still out of work that aren't comfortable really plowing back into the economy, and the aid, I am skeptical if that's going to get done at any type of expedited pace if they're just beginning things as that's about to fall off, especially if we're in the summer and things might continue to spike like they are in Florida and like they are in some of these other states here as listed. Okay, jumping around to some of the stocks with action today. So Target, the retailer, announced a 3% dividend hike, increasing the quarterly payout by 2 cents a share to 68 cents per share. Jumping over to Target shares this morning, everything is getting hit hard in the market. So no matter what was going to happen as a result of that, Target trading down from 120 to 118. You get the S&Ps down almost 3%. The whole market is getting crushed as well. Some of the stocks that I like to look at, myself, that we talk about a lot, really getting hit. Some of the more volatile stocks have rebounded nicely, but pulling back when the market does. You got Disney trading down hard from 122 to 116. They're scheduled to start opening back up in California and in Florida in terms of the parks in July. So they got some time to go. Uber. So Uber, the deal with Grubhub falling apart, and the Grubhub actually announcing, where are they? Right here, that they're going to be acquired by European food delivery firm JustEatTakeaway.com in a $7.3 billion all-stock deal. It's going to create the world's largest food delivery company outside China. The agreement comes after acquisition talks between Grubhub and Uber fell apart. One of those concerns had been Uber about antitrust concerns, whether they could get it through, whether they wanted to fight that battle. Nonetheless, Uber, since the start of yesterday, down from 37, to about 32. Checking in on some of the biggest ones. Amazon was up to 27.22 yesterday at one point, under 2,600, 25.88. Still a relatively great valuation for Amazon. And how about Tesla yesterday? Tesla holding up pretty well today in face of a tough market, right? Tesla, 988 still, with the S&Ps getting clobbered. NASDAQ, Dow, you got Tesla flirting just under 1,000. Yesterday closed it out at 1,025. Stay tuned, folks. We'll be coming back from the break, see what else we have on tap for equities moving on Thursday. Dow off 809, S&Ps negative by 76. I'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. One of the stories coming out last night I was checking out. So Amazon, they're going to ban police use of facial recognition technology for 1 year. We've advocated that government should put in place stronger regulations to govern the ethical use of facial recognition technology. And in recent days, Congress appears ready to take on that challenge. Amazon said in a statement they're putting a 1-year moratorium on police use of that recognition in hopes that maybe the government gets some more regulations. Facial recognition, folks, unless we want to live in a world that's literally time cop where the government controls everything, everybody, every face, everywhere, I hope we do see some regulations there for sure. We already jumped to Amazon shares. Trading off a bit. Jumping around to some of the Fed speak yesterday, some of the comments that caught my ear. One that you may hear repeatedly, strong statement, but makes sense. And Fed Chairman Powell says, we're not thinking about raising rates. We're not even thinking about raising rates. It would make sense. Why would you even be considering thinking about raising rates right now when you have weekly jobless claims at 1.5 million, unemployment at 13%, not in the picture? What we're thinking about is providing support for the economy. We think this is going to take some time. So the central bank repeated its commitment from the April meeting that it, quote, expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. It is really tough for me to imagine a time where you could say that the market, you can be confident that the economy has weathered what's going on in the recent events, because that means you have to kind of surpass what we're dealing with, which is a year, right? 6 months, a year, 18 months, 2 years, and achieve its maximum employment and price stability goals. So they're going to have that commitment for a long time. The Fed also said it will continue to increase its bond holdings, targeting Treasury purchases at $80 billion a month, mortgage-backed securities at $40 billion, and getting into one of the quotes. So I want to get to the bottom here. I had the dot plot of committee members' rate expectations shows little dissent about keeping rates anchored through 2022. You're talking about 2.5 years almost. That's a remarkable statement. The committee's 17 members unanimously saw the near zero stance holding through 2021, and only 2 expected that to rise in 2022. So unanimous of near zero for a year and a half, and 15 out of 17 says near zero for 2.5 years. No members indicated negative rates, though, a question that has come up repeatedly for Fed officials during public appearances. The fundamental concept of negative interest rates, if you are not rewarded to borrow money by paying no interest, then you're probably not going to be rewarded as an incentivized. It's not going to be a big enough incentive. If you're not incentivized to borrow money right now at zero interest rate, then you're probably not going to come running, knocking on the door to borrow money at negative a quarter basis or a half basis point, right? That would make sense. Nonetheless. So some of the stocks with action today, as we mentioned it. Target with their dividend. Regeneron, they began human testing on the experimental COVID-19 antibody cocktail designed as a treatment for the disease. You have their chief scientific officer, George Yancopoulos, said the company should know within a month whether the treatment is effective. This has been one of the more volatile stocks as we ebb and flow with their news. Regeneron up a bit today to 6. We got a bid ask of 609 by 619, nonetheless up when the market's down about 3%. Eli Lilly could have a COVID-19 treatment authorized for use as early as September. The drug maker's chief scientist told Reuters that a timeline could be met if either of the two antibody therapies currently in testing prove successful. Lilly has also a third antibody treatment in preclinical studies, LLY. Jumping to some of the biotechs. Down a bit from 151 to 149 with the market. We talked about Grubhub, so they're going to be acquired by Just Eat Takeaway. We looked at Uber. They're trading down big with the market. Grubhub shares trading up on that news from 57 yesterday. The news breaks last night up to about 62.81, was as high as 66 as they like that news. Let's just put this. Is this, I believe that's going to be, yeah, we got as high in that first indication that Uber may be going after them to 65 almost. Currently going to open at about 62.63 on Grubhub. So Apple, Bank of America Securities, they're raising the price target on Apple to a street high $390 from a prior $340, maintaining a buy rating. The firm cited a number of positive factors, including the upcoming 5G iPhone cycle, 20% growth in hardware sales next year. I'm kind of waiting for a 5G iPhone. I think I have an iPhone 10, great phone, but I'm going on almost 2 years now. And so I imagine there's a lot of people like myself, whether they're on an iPhone 8, 9, 10, or just want to upgrade from the continual of the iPhone 10X. No, I don't have a 10 because that's the X. So I have an iPhone 9 maybe. Nonetheless, Apple, talk about a run recently. All the way to 354 yesterday. You put this on some time frame. How about that acceleration? Way above where we were. We were only at about 320 for a while, flirting with this number from January. January 13th, you're up as 317. February 21st, you're in the 317 range. We're currently floating at 352, and they just got that price target to 390 over at Bank of America. Children's Place out with their numbers. They lost $1.96 a share, smaller than the 214 the market was looking for. Revenue below forecast with stores closed due to the pandemic. They also said online demand had quadrupled over a year ago, and that it planned to have a majority of its stores open by July 1st. Now, here's what I always say when you hear percentages like that of online growth. When you talk percentages, what was a company like Children's Place? What was their online demand? How are they quantifying online demand, number one? What was that online demand? And you might be able to find this out in the numbers, but when they put out their cherry-picked numbers, right? What if they were only doing $100,000 in online sales because they focus on malls and people coming into their stores, foot traffic? What if they were only doing 100,000? They could have done 400,000, which is negligible PLC. I'm just pointing this out. When you hear those types of numbers, you're going to hear them in terms of the rebound. And we're going to open a bit lower. Yeah, from 47. So you see the drop to 9. They come out with their numbers in March. We're out with their numbers again this quarter. And we're trading from 47 down to 41. So looking like whatever they're talking about, quadrupling online demand, not quite carrying the stock, trading lower this morning for Children's Place. Unilever plans to combine its Dutch and British entities to a single holding company in Britain. Consumer goods giant said the plan would not affect staff neither Britain or Netherlands. Tesla, they won Chinese government approval to build Model 3 vehicles with cobalt-free LFP batteries. Tesla, we saw it under 1,000, but holding up well today. Walmart, that's going into just tailored brands. Yeah, Tyson, how about this story? The price fixing story. You had one executive getting arrested on criminal charges in the last month. Tyson said it's cooperating, as if you don't have enough going on right now, right? Plants getting shut down. You're going to hear a lot about this, folks, because it seems like the 4 or 5 biggest meat producers out there, whether it's chicken, they're going to look into beef, they've just been colluding to fix prices for the longest time. It would make sense, right? And why not? So Delta, they're going to seek concessions from lenders, surprise, surprise, in order to prevent the carrier from falling out of compliance with certain debt requirements. Under current conditions, Delta said it would be out of compliance by early next year. It's got to be nice where you just borrow a bunch of money, and you come back to them and say, hey, the terms that you wanted us to borrow under, yeah, that's not going to work because we're not going to make that work in the next year. Delta down to 26. I mean, the volatility in these airlines, they're all getting clobbered today. But you're going to see Delta open down $5. United from 40 down to 33. Love from 37 to 32. JetBlue, JBLU. Yeah, down to 1090 from 15 on Tuesday. Stay tuned, folks. We'll come right back to finish up the program. I'll be back in 3 minutes.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, bam! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Checking in on the markets right now. We got the Dow hanging at about 26,082. NASDAQ catching a little bit of a pop in the last 5 minutes, about 99.18 after touching almost 9,900. S&P's at 3103 after touching 3,100. Crude contract just under 37 at 36.88. Jumping over to the weekly jobless claims number, we got at 8:30. Unemployment claims totaled 1.5 million compared to the 1.6 the market was looking for. Continuing claims, or those collecting benefits for at least 2 weeks, declined to 20.9 million. A remarkable number, folks. 21 million unemployment claims. That number, only 339,000 fewer than a week ago. The total claims number has fallen for 10 straight weeks. Yeah, it's fallen, folks, okay? This is what we're looking at here. The biggest spike that we got, 6 million plus. We're trailing off. But if that trend continues, we're going to see the biggest number ever before COVID was, I believe, 700 to 800,000 for a weekly jobless claims number. And we're approaching 1.5 million. And we're saying that, guess what, it's increasing at a decreasing rate, though, right? It's a decreasing rate. Well, it's going to take a while until these numbers normalize for the number of weekly claims we're dealing with. Total over past 12 weeks now, 44.2 million. Quite a number for sure. One of the stories I had up here, why not? We'll finish it off with some light math. So there was a recent $410 million Mega Millions jackpot. Somebody won it in Arizona. Talking about the taxes, Uncle Sam, quite a haircut. But guess what, folks? When you're dealing with a couple $100 million, not the end of the world. You take out some $410 million jackpot. First thing you do, cash option, $316 million that gets reduced to. You 24% federal tax withholding, that knocks it off by $76 million. In Arizona, their state taxes, not in Florida, $15.2 million getting shaved. In other words, the $316 cash option reduced $225 million going to your bank account after taxes. Not bad. Now, what they do mention in here, though, is that you got to pay your federal income tax rate, and that's going to be above 24% in a lot of areas because you're going to be a high earner when you're earning $200 million. Nonetheless, Mega Millions reduced back down to 20 million now. Stay tuned, folks. Should be an interesting day in the market. S&P's negative